Cody, why don't you kick us off with what's going on here in September and how we're seeing different indices react?
Yep. So let's pull up a quick chart. Here we go. So this is from September 1st till today, what the different indices are doing. So the bottom line is the NASDAQ, so tech companies. And then we have the top line, which is the bond index. So you can see that's been pretty steady throughout September, which is obviously what we want from the bond index. Tech has had a sell-off since September. It's down almost 11%. They have obviously led the rally going higher. So, I mean, some of the people are just taking profits, and some of the high valuations people are getting a little concerned about.
Yeah, we saw an article in the Wall Street Journal that talked or had mentioned last Friday that the QQQ, an ETF that tracks 100 of the technology companies, had withdrawals of $3.5 billion, which is the greatest amount since 2000, since the year 2000 in a single day distribution. That's just crazy. And it's still going strong if you look at the year-to-date numbers for the technology indexes. A correction like this, a 10% pullback, probably isn't a bad thing, especially in an area of the market that has had such a strong run-up. It's healthy to kind of reset a little bit. So I don't think that's the worst thing. And how do you think about this in the context of diversification?
Yeah, exactly. I think that's one of the most important things that we try to communicate to our clients, that we want to be diversified. And obviously tech has led over the past, 5 years, and especially this year. But you can see they've had the largest sell-off in September when the bond funds have held even, which is what we want, getting the little dividends from there. And then, you can see the value positions haven't sold off near as much as the high valued tech. And international is only off around 3%, which I think is good to see.
Yeah. And I do wonder how much of that. So the next thing we want to talk about is the bullwhip effect. When this pandemic started, so many companies, the supply chains were disrupted, and a lot of the supply chains rooting back to China. And so manufacturers didn't have the materials and the goods that they needed to make the products, to stock the shelves. And so we saw it. A lot of us saw it across different things, all the way from, tortilla chips to disinfectant wipes. And we're still looking for those disinfectant wipes. But as companies are getting back up and running, and those supply chains are back up and running again, many of them coming internationally. Now manufacturers are able to produce them. But what happened was, companies, rather than, if they weren't getting enough production coming in, they were using up their inventories and depleting those inventories. So now they need production to not only meet demand, but to rebuild those inventories. And that's what that bullwhip effect is. So interesting that we may actually see a boost here in the economy just from getting, products back to their normal levels. Was there anything that jumped out to you, Cody, or any thoughts on that?
Nothing really jumped out. I just thought it was really interesting, especially, toilet paper towels. Everyone knows how crazy and hard it was to find back in March and April. Since their inventories were completely depleted, they're still trying to catch up and just meet demand, and then obviously build the inventory back up. So it'll be interesting to see how that affects the economy going forward, with all the supply chains finally getting back online.
Mm-hmm. I'd read a different article recently too, just about, Clorox wipes, and how even as those supply chains get back in place, there's a lot of catch up to be done. And as we move into flu season, like they're saying, things might not be normalized for several months down the road, possibly even up to a year, before that just becomes a standard thing that you pull off the shelf again.
Wow.
Yeah. And then finally, remote work. Once again, we're 6 months into this quasi environment, and I say quasi because even companies that have gone back are seeing that you're still not back 100% of the time in the office, or if you are, very quickly that can change and that can turn. So Cody, you had posted an article that it was short little snippets of interviews with different CEOs and how they were thinking about the remote work environment now being, several months into it as they're starting to see kind of the effects. What were some comments that jumped out to you?
I just thought it was interesting because, earlier this year, in late spring and early summer, all the CEOs were saying how great remote work is. It's still going good for everybody, but I think it's good to see that a lot of the top CEOs are saying they can't wait to get back into the office. They have seen with a lot more data that productivity isn't the same that it's been, which is interesting. I think that's kind of expected. But it was interesting to see like Netflix CEO, Tim Cook, Apple CEO, JP Morgan CEO, Microsoft CEO, all these large companies are saying how excited they are to get back into the office.
Yeah. And you're right. Many of them in the very beginning were saying they don't expect it to return to normal, that this is, they're seeing a lot of high productivity, and some of them still are. I think JP Morgan even said that, they don't envision getting back to more than 60 or 70% of the workforce in the office. But it is interesting to listen to them saying it's just not the same. It's just not the same with the distance. And I think, quite honestly, in our office, I love being in the office. I think there's just a certain level of collaboration and impromptu conversation and impromptu kind of support, validation, everything else it's difficult to capture from a distance. But at the same time, as we're learning, like everybody else, we have to be nimble. So there are times that we've said, you know what, I think it's better for everybody to work remotely right now. If somebody was traveling somewhere or whatever the case may be, or if there are just any concerns with school and sports and everything else starting up. So it's definitely a time to be flexible. All right. Well, we really thank you all for joining us today for this market update with Morton Brown Family Wealth. If you ever have any questions or topics or anything else that you would like us to cover, please don't hesitate to reach out. We would love to hear from you, love to hear what's top of mind. And if you have a question, probably other people do too. So please don't be shy about reaching out. We hope you have a great week, and we'll talk to you next week. Take care.